Hi, welcome back to The Move That Matters. This is Susie Tatum at Keller Williams Properties, and we are going through a buyer's roadmap. So as last week, we have discussed what really to do first, and one of the first things that we had discussed that you need is a lender. And today I am welcoming Preston Breeding with First Choice Lending. Hi Preston, how are you?
I'm doing well. How are you?
I'm good. Thank you for joining me today.
No, thank you for having me.
Today we're going to talk about, last week we had talked about what you really needed to do. You needed to get with a realtor, you needed to find a realtor and a lender.
Yep.
So the next step would be actually getting with your lender. And one of the things I wanted to ask is, what should someone financially do before they seriously start looking for a home?
I would say the first thing would be talk to or look at themselves and their financial situation or their spouse and get together and look at how much money I have saved, what debts I have, and then kind of get their ducks in a row there on them personally, and then reach out to a lender in this situation and kind of give them their thoughts, their situations, what they want to do, and then pass along that information to then be dissected by them.
Okay, now I know one of the things that I come across is a lot of people are afraid to come to a lender because they feel like their credit's bad or they're not going to be approved.
Yep.
So, I want to ask you another question about what is the difference between being pre-qualified and being pre-approved?
So pre-qualified is going to be you verbally come to me and say, hey, I make $50,000 a year, I have $10,000 in the bank, and I have $500 worth of debt. What can I get approved for on that? And so I go through it and I can comfortably say I can get you approved for $200,000 at this right here, this moment. I can verbally pre-qualify you. There's no official documents given or anything of that nature. Pre-approved is you supplying me your W-2s, your pay stubs, your bank statements, and me going through it and hopefully with a fine-tooth comb finding anything that should or shouldn't be there, pulling credit, and seeing what we can officially get you approved for.
Okay, so if someone is afraid, you should just tell them just to come on in, and that way they can be prepared and prepare themselves.
Yes.
So what do they need? Which you pretty much answered this with what documents do they need when they come to see you?
Yeah, so if you work for a company and you're a W-2 salary or hourly employee, I'll need 2 years W-2s, your 2 most recent pay stubs, 2 months bank statements, driver's license, and then if you are a 1099 employee or own your own business, I'll need your last 2 years tax returns.
Okay, that sounds good. Now, so okay, let's say you've got them approved.
Yep.
Were there, let's say that they've been approved for $500,000.
Okay.
Does that mean they need to spend that $500,000?
Absolutely not. No. My thought is see the max you can get somebody approved for, and then ask the question, what are you comfortable paying?
Yeah.
Because some people might think, oh, I have to get a $500,000 house because that's what I'm approved for, but we go off of gross income.
Yeah.
So we're not taking out your taxes, insurance,
Social Security.
Correct. So that number of what you can actually afford minimizes.
Yes. And another thing that I wanted to ask you would be, it's not just the principal and the interest.
No.
What other things do they need to be thinking about? What else goes into the loan?
So principal,
for the most part.
For your monthly payment, it's going to be principal, interest, taxes, so your property taxes each year, and then your monthly insurance as well. And then on top of that, mortgage insurance. So if you're not on FHA, USDA, and then conventional loans where you don't have 20% down, you are going to have mortgage insurance. That's just in your monthly fixed cost, but outside of that, you have your down payment, you have your closing costs. That can be paid for by seller concessions, but that's not always the case. So
Yeah, it really depends on the market that we are in at that time.
Correct. So right now, people are getting seller concessions. Maybe 6 months from now, we won't be.
Yeah.
So you can't bank on it. So need to kind of save up for seller concessions, which can range from 2.5% to 5% of the sale of the home. And then on top of that, we have home inspections. You're gonna have to factor in when you finally close on the home, moving costs, just little things you're not gonna be.
Something that came in unexpected.
Yep, little fixes. Oh, we got in and week one the
heater went out.
The HVAC went out, so need to get the technician out. Need to have a little bit of a cushion, but all of it, closing costs, inspections, appraisals, all of that.
Some people don't factor that in
Correct.
with their payment.
Mm-hmm.
Okay, and what you had mentioned conventional and FHA.
Yep.
What types of loans? I know some people think I have to have 20% down.
Mm-hmm.
I can't afford a home. What types of loans do you offer?
We offer everything from conventional USDA, FHA, VA, DSCR loans for investment properties, bridge loans. If there's a loan out there, we probably have some form of it. We might not always be able to make it work, but we can always try, and that's the goal.
Yeah.
And then we have two different down payment assistance programs. One that goes up to a 660 credit score, and one that goes down to a 600 credit score. So we have options for people that are.
So they don't have to have the whole 20% down.
No.
Can they go as low as not
0.
having anything down?
Yep, we can make it work if we have seller concessions where the buyer is not needing to come to closing with a single penny.
Oh, that's awesome. Okay, what are some of the biggest financial mistakes that they can do before the mortgage process or during actually looking at a home?
The whole process. Once you're approved, I would recommend not changing anything from your situation from the point of being approved. So that means don't open up lines of credit. Don't go
buy a car.
Spend yes, please don't buy a car. Don't unless you just have the funds to go buy $10,000 worth of furniture. Don't go buy furniture. Don't finance your furniture. Don't close any credit cards. So people think it's good to
well, that's what I was getting ready to say. What if you close out your credit
correct.
cards?
People think it's not a good thing to get rid of bad debt. Well, a credit card's not good or bad necessarily. It can be bad for some people, but if it's been a good thing for you, don't close a good line of credit.
Okay.
Anything that can affect your credit score, let's try and keep everything the same or better than where we started.
What are there any first-time buyers that, I guess, that don't understand the process?
Absolutely. And
I mean, I didn't when I bought my first home. I had no idea.
When I started mortgages, I had no idea what I was getting into. I didn't know anything about it, and then I'm trying to help people, finance their homes, and it's anyone from someone later in life that's bought 7 homes to somebody buying their first. So it's a fun teaching process, but plenty of people don't know the process, and that's what we're here for.
Okay. Now, do buyers tend to worry about what's usually, I mean, they're frightened, but once you explain, they're normally like, oh, okay, I didn't realize that this could.
Yes, some people, especially once they are able to stomach the payment and they're like, that I'm comfortable with this payment, a lot of it kind of starts to settle in of, I can do this, and then go through the whole process of, okay, we've got the contract, we're getting it submitted, now let's get it to underwriting.
Yeah, and that can be.
It can be nerve-wracking, but you go back and forth enough, and hopefully you have a good rapport with them to make them feel comfortable where you can ask them for more information and it's not a headache to them, and they can come and ask you the same thing. So it's a relationship. It's a stressful one, but
well, it's the same thing as being in the real estate. You
Correct.
develop relationships, and they come to me, worrying, and I put out.
Yep, you have to kind of explain it to make them
understand.
Yep,
the
understand,
process.
and then as long as there's no more questions and you both feel comfortable at the end of the call, then that's all that matters, and you can kind of move on to the next fire.
Yeah, I get that one.
Because they will come up.
Okay, so for someone that will be purchasing a home in the next 6 to 12 months, and they don't know, they just don't feel like they're ready, what should they do? I mean, we've kind of discussed that before, but
it's biased, but get with a lender.
Yeah.
And it's not to say you have to do anything tomorrow. You don't have to supply them anything. It's more just to get with somebody that knows what
so they can prepare.
Correct.
And be ready in that 6 months.
Yep.
So even though that way they'll know, I said at the beginning, they're afraid to come to a lender because they're afraid they have credit, or they have bad credit, or something going on. But if they go ahead and come to you now,
we can start working on it.
And you can start working on it and correct the things that may be wrong.
Correct.
Okay. So this is the last question.
Okay.
What is the one piece of advice that you wish every buyer heard before beginning the home process?
Ooh. I'll take my own advice here, and I'm not good at it, but bite the bullet and don't go buy a home necessarily, but take the leap of faith to start researching it and feel open to reaching out to a lender, just so you know your situation. Because I knew my situation pretty well when we bought our home last year, but I was still scared.
Well, yeah.
Yeah, it's a big
process,
purchase.
and it's going to be one of, I know it's going to be probably the biggest purchase I've ever made in my life.
It'll be mine. I can tell you that. So I'm not good at it, but I would say bite the bullet and just start the process. And you might
doesn't mean you have to fully commit to it.
You don't have to commit. Don't have to do anything, but jump into it and at least get an idea and start researching lenders, realtors, anything, and just so you can learn what questions to ask and educate yourself.
Thank you. Well, thank you for being with us today.
Thank you for having me.
And this was Preston Breeding with First Choice Lending, and if you have any information or want to get in contact with them, just let me know, and I'm going to put the number and the name of the company with this link. So I will see you next time on The Move That Matters. Thank you.